Hello everyone, today is January 3rd, 2013. I'm glad you made it. This video is mainly for the people who are new to money. Might sound kind of funny, but unless you have some of this, or this, 1964, 90% silver quarter, unless you have some of this stuff, you don't have any money. I don't care what we're talking about. Electronic digits in the bank that aren't worth the paper they're not printed on, like Gerald Salente says. Or you have some of this promissory note right here, promise to pay you nothing. Right here, which is the same value as this, promise to pay you nothing. You see, these used to promise to pay you money. Prior to 1964, you could take one of these in and you could trade it in for some money. Silver dollar, perhaps. That was the money. So you could, you know, this said right on it that it was good to be traded in for $1. It was a promise to pay. Well, now these are a promise to pay you nothing. And they really don't have much difference in the value. They're both pieces of paper. And I want to get into this. I want to get into, go ahead and pause the video if you want. Get yourself a glass of wine, get a beer, maybe JD and Coke, whatever you like. Maybe we could do a video on your favorite drink. I like wine. Anyhow, so I want to get into this. And I want to talk to people who are on the fence, who aren't sure if they want to get in to precious metals or not. Their cousin's saying, yeah, it's a horrible investment. I mean, you don't want to be in silver and gold. It's gone, you know, silver, gold, gone nowhere the past couple of years. My Cisco, yeah, going way back. My Google stock's done real well. My Apple stock's done great. That's where you want to be. You know, Google's at 700 or something a share now. You know, it'll be 1400 next year or the year after, whatever. I mean, we don't know what's going to happen, but anyway, this is not about stocks. Stocks are paper assets. I don't see how anyone, well, I do, because what I'm talking about doesn't have anything to do with the NFL or the NBA, but that's beside the point. With the way things are now, I just don't see how people could not be holding some real money. Now, don't get me wrong. I'm not saying you got to go all in. I mean, this isn't about taking everything you have and just accumulating a bunch of gold and silver. That's not what I'm recommending. That's not what I've been talking about in this channel. Normally, right now, I'd be doing a prediction video, which I'm not going to do this year, and I'll explain why before the end of the video. So, you know, I'm not saying go all in. I'm saying with a $1.25 quadrillion derivative market that the IMF, the International Monetary Fund, recently said was a weapon of mass destruction, how could you not want to hold some real money? That same weapon of mass destruction that took us down in 2008, that caused the Fed to do this. This is the monetary base. This is also known as the balance sheet of the Federal Reserve. 1985. 2007, $800 billion. Well, we're at 2.8 trillion now. More than tripled. They're about to add $1 trillion in 2013. This year could possibly add $1 trillion next year. So this here could be up here. I mean, just looking at this, we're not in that little recovery that they want you to believe we're in. It's not happening. I mean, for the Fed to be printing 85 billion a month, this month, next month, month after that, things aren't as rosy as they'd have you believe on CNBC. So, I wanted to get into this. I want to talk about the manipulation. 50 million ounces of silver sold in 5 minutes. 192 million ounces of silver dropped on the little tiny silver market in one day. quarter of world production. I mean, to me, I look at this stuff, the manipulation is blatant now. I saw silver down 4% tonight. I mean, you don't want to look at this as investing. I kind of looked at it as investing because I invested in stocks for 10, 15 years. I valued companies based on the book value per share. I looked at all that stuff. I don't do it so much anymore. I'm more concentrated on thinking about real money as opposed to shares of a company. But my main point here is you have to have some real money. Now, you're going to hear people say all types of things. You're going to hear people say, what good would a gold bar do somebody going down on the Titanic? Gold they're not going to do anything for you. I mean, yeah, okay. Maybe they would have been better off holding a bag of rice. I don't know. I mean, that type of stuff is just stupid, ridiculous. You'll hear all types of stuff, but I got 5,000 years of history on my side, as opposed to 41 years of history on the global monopoly paper money debt system we have that's not backed up by anything. Promises to pay nothing. That's what all the paper currencies around the world give you. A promise to pay you nothing. So we've been on that system for 41 years, and it's not looking good. And I don't see how you can't want to have some of this stuff that makes a nice clicking noise. I mean, how could you not want to have real money? It's obvious to me. I've done my homework. But I'm trying to explain this to people who are on the fence, who don't understand what real money is. Alright, now, I took a few notes here. This right here is probably the crux of the whole video. This is the important thing here. 2,000 years ago, Aristotle defined what money was. Now, the reason people are confused, thinking of this paper crap, these paper nothings are money. And yeah, I have to use them because I'm in the system. I got to use this to fill up my gas tank. I can't use, a silver, this is a silver dollar. I could use this and only take it as a dollar, which would be stupid. I mean, here's a regular, just silver round, 1 ounce pure silver, 30 bucks. I can't pay with this. But I can save in this. That's what this is all about. It's about savings over a period of time. Back in the 1960s, you get a gallon of gas with this. I can get almost 2 gallons of gas with this now. But if this was one of our current quarters, which isn't worth hardly anything for the metal value, you'd need 12 of them to get a gallon of gas. Well, this one here maintained its value because it's money. So let's go over here, talk about this real quick. Oh, one last thing I wanted to mention was that there were 3 main points as why you would want to hold real money. Now, there's a lot more points than that. These are the ones that I came up with. $1.25 quadrillion derivative market. Printing of $1 trillion this year, US dollars, and an $800 trillion LIBOR rate scandal, manipulation. I mean, all the markets are manipulated. That's why I don't believe in a 401k. I don't really have any stocks anymore. I don't really want paper assets. I want hard assets. And the reason I'm not making a prediction this year, last year my predictions were way off because I expected much higher metal prices, just like a lot of other analysts and people that know the metals markets way better than I do were predicting much higher metal prices. Now, the paper price was not as allowed to go that high. So I'm not even going to attempt to make a prediction this year. A couple of years ago, I predicted we'd see $33 silver. We got up to 32. I think it was 2010. I mean, I came within dollars of it. I think last year I came real close on the gold. I said we're going to see $1,900 gold. I think we saw $1,920 or something. I don't know. But that's just luck. I don't know where. I mean, I know that they're going higher because the dollar's falling. they're, in terms of dollars, are going higher, but these just maintain their value throughout time. They're not going up, and that's what I really want the new people to understand. These maintain their value. This 5 pesos right here, this is a 5 peso coin with the Hidalgo. You know, that was, what, 50 cents? You could take 2 of these in the 50s, and you could get yourself one of these. I mean, think of the people that did that. That's because the peso's been devalued so much more than the US dollar. People in Mexico who accumulated these and hold them now, I mean, this 200 bucks. So 200 bucks, I mean, back then it was 50 cents. I mean, talk about a preservation of value. So anyway, well, we could get into a whole lot of stuff. I mean, you don't want to store it. That's the problem. People tell you how you're going to store it. And, well, you don't want to keep it all. You don't want to store it in a bank or a vault. You want to store it where you can get your mitts on it, get your hands on it. That's what you want to do. You want to have, if you can't hold your money, you don't have your money. You want to be able to hold your money. My best suggestion is you have a little bit here, you have a little bit there, have a little bag over here, have a little bag up in, you know, Uncle Joe's attic in the corner. His house burns down. You got a lump. You still got your money. If you have a bunch of these in Uncle Joe's attic and it burns down, you got nothing. But you have your money. Money's not going anywhere. That goes back to what Aristotle said. Money. 5 things. Why this is not money and why this is money. Durable. Stand the test of time. Well, this is going to be around for quite a while, this Morgan. This stuff here, I don't know. It's not going to be around forever. I can put an end to this real quick. I can't put an end to this real quick and give you a lighter. I can put an end to those paper notes. So these get a no in the durable column, and these get a yes. Portable. They're both portable. Okay, I'll give it that. Portable. Easily divisible? Well, that's debatable. You and I can't really divide this up. But if we get some other ones, you know, 100 of these ones, we could divide it. You can't easily divide this, but we could cut it up. I don't know. So it's debatable on the divisible thing. Store of value. There's no store of value here. And 20 of these would get you 1920. 20 bucks would get you a suit, leather belt, leather shoes. Same with the $20 gold piece. Get you the same thing. You know, that same $20 gold piece now, that's, you know, in the $1,000 range, still get you a suit, shoes, and a belt. Well, what's the 20 paper dollars going to get you now? Maybe a tie? I mean, no store value here. We know that. You know, I'm not telling you anything you don't know, even if you're new to precious metals. So no store value. And must have intrinsic value. That's something that Aristotle said. Well, this has intrinsic value. There's no intrinsic value here. The intrinsic value here comes out of the barrel of a gun because it's legal tender. So you'll be prosecuted if you don't accept this as legal money. So you're being forced to accept this as money. That's where its intrinsic value comes from. It comes from force. But there's no force here. This has value. And it always has. I mean, it has value. So anyway, I just wanted to do a quick video. I hope I didn't run too long. Just some things I had on my mind and I want to talk about. And I hope this helps out some people that are on the fence, thinking mainly that, you know, silver and gold or high-risk investments with collector coins. I mean, that's none of this. I don't have collector coins. This is just all valued for the, you know, the weight of the metal. No, I don't want collector coins. Now, some people argue with me, you got to have some collector coins because those go up a lot more. I don't know enough about collector coins. I just know that I want to have some real money in my hands with all the things that we're facing right now, and I feel comfortable knowing that I have some money.